I usually don't make videos inside my car, but today's an exception. I just bought a car. I just bought this car a couple of days ago, and I want to talk about it. I paid $1,500 for this Toyota Camry. It's a 2000. It's got 200,000 miles on it. Take a look. Nice, clean. And I paid $1,500 for this thing, and I thought it was a pretty good deal. Let me know your thoughts, comment down below. But if I really didn't have the cash, I could take an ounce of gold, maybe an ounce, let's say that I bought in 2018, where I paid $1,268 for it, or an ounce that I bought in 2019 that I paid $1,393 for, or an ounce back in 2020 that I paid $1,773 for. I could cash it out today for $1,850. And people will say, well, what do I do? Who will buy it? Well, you could go to a gold exchange. You could go to a precious metals refinery. I called a couple today. They were paying over spot $10, $20. There's a jeweler paying $30 for Eagles over spot right now. And people will say, well, I'm paying $80 to $100 over spot right now. But those coins that I bought back in 2015, 2016, 17 rounds, I was paying maybe 30, 35, 25 over spot. Eagles, I think, were about $40 over spot. And when you go into these places, to a jeweler, to a refinery, many times you'll never pay tax, because unless the transaction is 10,000 or over, it's reported. If it's under that, it's not reported. And many times you'll just walk out with cash. So that's the beauty of it. Again, gold is untrackable and unhackable. And in many times when you're doing these transactions under $10,000, you're paying no tax. Many times you're just walking out with an envelope of cash. So in essence, I could have just sold a coin, made a few dollars off of it, and bought a 2000 Toyota Camry. And why did I buy this car? I have other vehicles, as many of you already know. I have other vehicles. Why did I buy another car? Well, because it was $1,500. This car probably gets 35 miles to the gallon. It's a little 4-cylinder. And why not have an extra vehicle? And I'm making this video today to tell all of you that deals are coming. I thought this was a good deal. $1,500 in this market right now. So if you have some cash, you can, or some gold, that gold is very liquid. You can turn it into cash and you can buy a vehicle like this. Maybe somebody would even trade you for that coin. But that coin now, that gold 1 ounce coin or round, is worth more than this car right now. So gold has purchasing power, and it's doing exactly what it should be doing right now. It's just slow and steady. Remember, if you go back 100 years ago and you went into a tailor and bought yourself a fine suit, it would cost you about $20 100 years ago to buy that suit. And basically 100 years ago, an ounce of gold was $20. Fast forward to 2022. That $20 today would not buy you the buttons on that suit. Now that 1 ounce gold coin today will buy you an $1,850 suit. Pretty nice suit. You can buy a pretty nice suit for about $2,000 today. I don't think anybody would argue that. But that $20 fiat currency bill will buy you maybe, I don't even know if it'd buy the buttons on a nice suit today, to tell you the truth. But I can tell you this, that 1 ounce gold round or coin today, just bought this Toyota Camry, which probably has at least 100,000 miles of life left on it. And these are the things now that we're going to start seeing. Even though vehicle sales are up, people are going to get desperate. They're going to begin, I think in the next 6 to 12 months, to begin unloading the toys, unloading the extra vehicles. People are going to get themselves into a serious jam. They're going to begin to sell their houses, the cars, the RVs, the fifth wheelers, the boats, the sand rails, the motorbikes, the Harleys, etc., the watches. It's all going to be coming up for sale. Those are the first things that always go first in order to make the rent payment or the mortgage payment. So these kind of things are going to be happening, and I thought that this was a really nice deal for $1,500, and now I have a car that's going to get me 35 miles per gallon in this gas-inflated economy now, and I believe that this car is an asset. It's going to serve a purpose, and it cost me only $1,500. So I'll get out here and just show it to you real quick if you care to even look at it. So here it is. Nothing special, right? I mean, just an old Camry. It's got a crack in the windshield. There we go. I've got to go back. I just had it smogged. I got to go back up and to AAA, pick up the new plates on Monday. These are the old plates. New ones will be here on Monday. But this is a 2000 Camry, $1,500. So now I have another Camry. I sold the old Camry because it was on its last leg, and now it's just been replaced for $1,500. So this to me was a no-brainer, especially in this economy. I think I could sell this car for double what I paid for it without a doubt, but I'm not going to do that. This is going to get me where I need to go. Yes, I have other cars, but this is really going to be my go-to right here. This old 2000 Toyota Camry at 200,000 miles on it. This is going to get me where I need to go. Not fancy. I don't care what people think of me when I pull up to a stoplight. I don't care what my friends think. I have other cars, but that's okay. This is the one I'm going to be driving every day, right here. This is it. If you have some cash put away, some gold, some silver that you can get liquid, you're going to be buying stuff like this. So you want to protect purchasing power, but you also want to have dollar bills. Because I have a cash reserve, when a deal like this popped up, and this car belonged to somebody that lives about a block away from me, who just bought another car, needed the space, didn't have anywhere to put it, so I bought it, took it off his hands. So it worked out really, really well. But I had a cash reserve, and immediately I could grab the cash and close the deal within minutes. So all I had to do is grab it and give it to him and drive off with the car. That's how easy it was. That's how quick it was. I didn't have to get a personal loan. I didn't have to go borrow it from somebody. I didn't have to go get a cash advance on my credit card. I just went, got the cash, and got the car. And that's why I think it's so important to have cash reserves, because you're going to want to capitalize on deals that are coming. And those deals, I think, are 6 to 12 months away. There is no doubt now that we are beginning to watch central banks across the globe raise interest rates. And why are they doing that? They are going to keep rising rates because they are going to protect their currencies. And because of these accelerated rises in interest rates, people's credit card payments to service that debt on those cards is going up. To borrow money, going up. Mortgages, to borrow money to buy a house, going up. Money to buy a car, going up. So this is why it's adamant, or I'm adamant, that you keep putting cash away in real assets to protect yourself against this debt. Protect yourself from debt, ladies and gentlemen. And the way you do that is you have cash, you have assets, and you control your spending. And you capitalize on the things that you really need when they go on sale. And I have no doubt in my mind that big sales are coming, bigger than the ones in 2008. Now, as I was watching some of the financial shows today, they were rating why this will not be as bad as 2008. And when they say that, that's like somebody telling you that, oh, this could never crash, this can never go down, this crypto can never fail. And all day today, they were telling us that this could never be as bad as 2008, or at least we don't think so. You better run for the hills when you hear people talking like that. Well, they say the housing market can't crash like it did last time. Of course it can. It will be brutal. It will be worse. But they say it won't be as bad because, well, people have more equity in their homes this time. Oh, well, that's nice. How quickly equity can disappear? Well, people have better credit this time. People have many more tools now to fix their credit, to get their FICO scores up. There's a lot of things you can do now online that you can prop up your credit score. What about debt? Don't people have a lot more debt than they did back in 2008? Household debt's much higher. What about inflation? Much higher. What about the cost of a gallon of gas? Much higher than it was before. But again, they say people have better credit today, not to worry. Record equity, not to worry. But we have 4.11% of mortgages right now past due. And remember, there's over 1 million homes right now in some kind of mortgage forbearance negotiations where people are not paying on those homes. As I've said many times, and I'll repeat this, we have a huge amount of homes under construction right now that are going to flood inventory. We have the adjustable rate mortgages back in high demand right now. People just haven't learned their lessons. We have layoffs increasing, household debt increasing. And remember, most of these people buying homes right now are putting the bare minimum down, 3%. So to me, subprime lending really hasn't gone away when a majority, about 62% of these homes that have been bought up over the last few years, they were all Freddie, Fannie Mae's, 3% down, no skin in the game. These people will walk as soon as they get into trouble. What about gas prices, food prices, and just inflation across the board, energy, insurance, all these prices, everything going up. And yet they tell us, don't worry, it can't happen, it won't be as bad. But we have a federal debt now of over $31 trillion, household debt screaming, credit card debt screaming, price of everything just going up, and up. And now we're going to see massive amounts of inventory hit the market at the worst possible time as we go in to a depression, as the Fed continues to raise rates, as the consumer has to pay more to put gas in that car, pay more for the car, pay more to insure the car. It's just a terrible situation, and I really don't see it getting any better. But this is why I think we're going to see a huge housing crash, and I think a lot of it is going to be job losses and the layoffs that are coming that nobody wants to talk about. We are going to see more companies, corporations, small business, medium business laying workers off. They are not going to make their rent. Their credit will be destroyed. They're not going to be able to make their mortgage payments on their house. And think about this. Most people today, it takes a two-person income to own a house today, maybe even more, because I see a lot of people with 4 or 5 cars in their driveway. So, you know, 2, 3, 4, 5 people paying on that mortgage. But what if the wife or the husband loses a job? What do you think is going to happen to that house? Layoffs are coming. Companies are going to be cutting back. They've already begun. It's going to continue. We're going to see mass numbers of people laid off. And the bottom line is this: it's going to be cash flow that really causes this next housing crisis. People don't have the money to pay the mortgages that they have right now. They are barely feeding their families. They barely have enough money to put gas in the car just to go to work. And their wages are being destroyed, their savings being destroyed. I mean, it's all bad news, ladies and gentlemen, and I'm sorry to report that. As I've said many times, I would much rather be making a car channel at Cars and Coffee and driving a Ferrari today. I'm driving this thing. This is my main car now. But I'd much rather be driving a Ferrari today, filming it, going to car shows and car meets and having a great time, joking around, laughing, and giggling like a little high school kid. But that's not going to happen. We got serious problems on our hands. This country, this economy is in huge trouble. People are going to really suffer. They're going to get hurt. They're going to take on massive losses. And this is why I caution all of you to be careful where you put your money and what you're spending your money on right now. You need to be buying assets. That right there, to me, is an asset. This right here, ladies and gentlemen, to me, is an asset. $1,500. I could sell it and make money today on it, but it's gonna get me where I need to go. And if I need to go to work every day and I have a longer commute, that's gonna save me a lot of money right there. And this is how people need to be thinking. But you know, unfortunately, most people think like, no, I need a new car, I need a new Charger, I need a new Challenger. And look, if you can write a check for it and buy one today, God bless you, have fun. There's nothing wrong with that. I love cars and I love being debt free. And if you can have both, God bless you. You're doing great. But even now, you got to think, is that money, is it really worth paying those overvalued prices for these cars right now for a new car? Or is it better somewhere else? Is it better just putting it away and waiting for the sales, putting some of it in gold, putting some of it in a cash reserve? But again, if you have enough money, if you're that well off, if you're making that much money, you can write a check and it's not going to put a dent in your savings or in your standard of living, go ahead and buy it, have fun. I mean, more power to you. I think it's extremely important to have things we enjoy, to have a good time, to be able to buy things that we can afford. But if you gotta finance something for 6, 7, 8 years, you shouldn't be buying it, and you certainly shouldn't be driving it. So getting back to this though, we have a society that just, we have this status that we want to drive something so that people like us, or so that we look important, or we can impress people we don't know while we go broke doing it. Again, if you can write a check and pay for it today, go for it. If you can't, you better think about what you're doing. This is not the time to be acquiring massive amounts of debt, especially for a car, especially when out here you're paying $7 for a gallon of gas for premium gas. Not the time to be doing it. So really, I advise caution today to all of you in regards to spending and where you're putting your money. There's people out there that just say, well, you can't put all your money under the mattress. You know, just put it in the bank. Yet they tell you how dangerous the banks are right now, but yet they tell you don't put your money under a mattress. I don't know. I think right now your money's probably safer under a mattress than in a bank, unfortunately. And I'm not telling you to pull all your money out. Keep enough in there to pay the bills, ladies and gentlemen, but be very, very cautious about keeping all your money in the bank. These banks are getting themselves into very, very big trouble. This economy is in big trouble. I don't trust the banks one iota. And there's people out there that'll say, well, everything's going to crash, the banks are going down, but don't keep all your money you know, at home. Don't keep all your money in other places. Just spread it in multiple banks. Well, if the banks go down, what stops multiple banks from taking your money and locking the doors? So I don't know. To me, if you don't hold it, you don't own it. To me, be your own central bank. That doesn't mean keep all your money at your house. Maybe there's other locations you can keep it in. But again, is it safer under your mattress, or is it safer in the bank? As we know, all these bank branches are closing. More and more banks are closing their branches, meaning it's going to be more difficult if you have to get to your bank to get money out. If we begin to see real panic, guess what? People are running to those banks. Well, if there's fewer banks in your city or your county, there's going to be longer lines and less cash in those banks for the average deposit or the average depositor. So again, I don't know, maybe keeping some money under the mattress, better yet, maybe get a high quality, high-end safe. Not a $200 or $300 safe. Go out, if you want to make a good investment today, you got a few $1,000s laying around, go buy a high quality safe. And if you're going to do that, you're going to spend well over $1,000 to do it, depending on size. But you know, in all reality, you know, $2,000, $3,000, $4,000 for a real high quality safe that somebody's just not going to pick up and walk out of your house with, that's a great investment today. So, you know, if you got a few $1,000s laying around and you've got cash and some assets and papers and jewelry and things like that, maybe some security tools, maybe a good investment today is taking $2,000 or $3,000 and getting yourself a very, very high quality safe. So markets still open as I make this video. They're pretty flat today. I don't know how they're going to close up. They've got a little while to go, but it's a pretty flat day. And tomorrow I probably won't be posting a video. I'm not sure. I might be posting a video, but Sunday I should have a really good show for you. I believe Matt and Sid will be making a guest appearance on the show for Sunday. So make sure to check. There might be a show tomorrow, but for sure, Sunday, very good show. Sid will be returning. He has a lot to talk about. Matt will be returning. He has a few things he wants to talk about. So make sure, for sure, you check out Sunday's show and check for tomorrow. Maybe a show, maybe not, I don't know. But anyways, I just wanted to just share that with you. Nothing major today, but I thought that this was important to talk about. Another asset. If you have cash and you have assets, you're going to be able to buy things like this on sale. And these, to me, this car is an asset to me now because it is saving me a lot of money on gas. And I don't care where I park it. I don't care if it gets a ding. And when I sell it, I'll sell it for more than I paid for it, guaranteed. Anyways, have a phenomenal weekend. Thanks for watching. Give this video a thumbs up. Make sure you subscribe. And I will talk with all of you very, very soon.